All right, good morning, everybody.
Who's buying it?
All right, let's get started.
What's that?
So yesterday, the Fed released their FOMC minutes, revealing a little more of a dovish tone than market participants had previously expected. I think that basically the original target was for a 6.5% unemployment rate before they started raising rates, and they basically said that that's outdated now. And so I think the market took that as bullish, and obviously had a pretty good day. We also saw high growth stocks that have previously been a little bit punished. Things like Facebook. I think Facebook was up 7.5%. They followed through on Tuesday's rally, setting the Nasdaq positive for the year. Okay, so this is just an interesting little stat on So now that we're starting U.S. earnings season, on the average percentage change on earnings report days by sector. So you can actually see on all of them combined, that the blue bar there, 5.41% is the average move. Once earnings are released. So that's actually really high. I mean, if you compare it to South African stocks, U.S. stocks in general, pretty volatile during earnings season. So if you are trading U.S. stocks, obviously be very cautious if you're entering if you have a trade that's going into earnings. Okay, Asian stocks gave back initial gains. I think they started up pretty strong with obviously on the back of the S&P, but then Chinese data disappointed the market. February exports falling 6.6%. So you can see pretty benign in Asia. Most indices up just small. Nothing too negative though. Just small gains out of Asia for the most part. No coal production today, and key factors to look at today. We had a bit of Japanese data out earlier. The Chinese data isn't in there, but as we said, down 6.6%. We got at 10 o'clock. We got the ECB monthly report. 11:30 mining production out of SA, as well as gold production. At 1 o'clock we have manufacturing production out of SA. We have the BOE interest rate decision out of the UK, and BOE asset purchase facility also out of the UK. And then 2:30 we've got initial jobless claims, so we always watch that, continuing jobless claims. And then at 8 o'clock the US monthly budget statement. All right, let's have a look at a few charts. The first one I want to have a look at is Anglo. So Anglo is one we've been obviously following over the last few months. We know that it's broken out of this major downtrend. It broke up, sort of beginning of the year, came all the way back to retest the breakout, and it has so far been trading pretty well. It's as we can see, it's formed this bull flag. We've shown that recently, and it hasn't been flying off the breakout, but it's been steadily moving upwards. And generally, what often happens when a stock's been in a good, short-term uptrend, it forms a bit of a sort of flag or boarding formation. In this case, it'll often head back to the previous highs, which is currently at 290, and sometimes these formations form sort of 50% of the move. So we could actually see a move significantly higher, into the 300s, based on this little break. The next one I wanted to show was Discovery. So Discovery, as we know, is also recently broken out. It basically formed a bit of a head and shoulders that failed. You can see from this head and shoulders here, it broke down initially, failed, and sort of consolidated right on the trend line for most of February and March, and then recently, as we've been showing, it broke out from that 80 level. It flew higher. It's moved about 10% higher in a very short space of time. We had its first negative day yesterday, only small down. We're reaching a little bit of a resistance level over here, not much, around 89 rand. The next major level is around 80, I would say, between 85 and 86 rand. I think if you can get a bit of stock around that level, whether you pick a pullback or wait for a reversal of that level. I think there could definitely be more upside in this one. It really, it's underperformed for quite a period of time when a lot of the other stocks in the sector have really outperformed. So I think there is a chance that it goes and retests that 100 Rand level in the short term, but hopefully we get a little bit of a consolidation or a pullback to buy off for that next move. All right, let's have a look at FirstRand. So FirstRand has formed this bit of an inverse head and shoulders there. You can call it a bit of a broadening formation breakout. Either way, it's got a much higher target. It had its first sort of reversal candle yesterday and showed a little bit of weakness yesterday. If we can get a little bit more follow through in the sort of coming days and weeks, I would say it's a really good buying opportunity. If by some miracle we get it down to around this 36 level, I would say that would be a great opportunity to pick it up to reach its full target of approximately, I think, 42 Rand. So still upside in FirstRand. Hopefully we get a little bit of consolidation or pullback to buy on to reach that full target. I just wanted to show Sanlam as well. Sanlam has also been one of the major outperformers recently. It's formed this inverse head and shoulders continuation, and it's actually, partly due to a little bit of a pullback and the divvy combined, we're now sitting right on that breakout point. This is a very interesting level. I would say that if we can, the full target is from this breakout, I think, is 62 Rand. So we haven't reached the target yet. If we can get a clear reversal off this level, which we've had a few sort of little green candles right on that level, then I'd say that we could be ready to go and retest that the previous high and possibly reach the full target of this inverse head and shoulders pattern. This is one that we've been showing on the Storm Twitter handle. It's AIP. It's formed almost on a bit of a double bottom here, and has now sort of had a good green candle sort of breaking through sort of the previous level. Well, if you want to be conservative, maybe it hasn't broken through, but it's right on that level. A very interesting level for AIP. Definitely worth watching it at these levels. If we can get another positive day through this level, I would say that's pretty much confirmation for the next move higher. If not, possibly look for a consolidation under this level and a breakout in the next week. If it does reverse off this level, then obviously, or if possibly it breaks this this uptrend that we've had recently, that could be a signal of some further weakness. We could also possibly form another, the right side of this inverse head and shoulders over the coming weeks. So keep an eye on it. It's at an interesting level. I don't want to give a confirmed buy yet, but looking interesting. And then obviously just the last one I want to show is CFR. CFR we've shown a lot. It's been in this sort of sideways trend for a long time now, and more recently it's been in a very small trend between 100 and sort of 103 Rand, sort of just going up and down in that small range. Whenever things tighten up like this, it normally indicates that a strong breakout in either direction. I think a strong move below 99.50, $100 around that level could indicate downside. If we can get a break up at the top of this range around 103, then I would think that there could be a follow through of this back to the top of this range around 112. I think keep a close eye on this range. There could really be an opportunity in either direction. And that's all for today, guys. Good luck trading.